discuss a bunch of other earnings as well trickling in, and let's welcome on board Muthu Murugappan, the Chief Executive Officer at EID Parry, and talk about how their business has been. Muthu, hi, morning. Good to have you in ET Now. Thank you for taking the time out. Just looking at your quarterly performance, and you've reported a loss in your distillery business in the quarter gone by. Tell us what really impacted the business. Is the impact of restrictions on use of sugar for ethanol and export bans, expected to recede in the coming quarters? Or would you say that this is a reality that you'll have to work with?
Very good morning, Aisha, and thank you for having me on the show. Raksha Bandhan greetings to all of you and your viewers. From the distillery segments perspective, yes, we have seen some headwinds. Sugar diversion towards ethanol was curbed late last year, and I think that has certainly impacted distillery margins. While our volumes have actually gone up by 15%, our EBITDA margins have come down. Around this quarter last year, we were at about 15%, headed towards around 20%, but now we're back down to about 9%. Apart from policy, I think a challenging sugarcane crushing season last year on account of deficit monsoons has also impacted the recovery. We've also added some capacity in the recent years, and I think some of that capacity addition has come on stream in between Q4 and Q1, and we've had some stabilization issues. These are technical and resolved, and that will augur well for margins. In terms of the outlook, I think we still await any policy decisions. Offtake prices of ethanol have been maintained for the last sort of 1.5 years. So we really expect some decisions around that. Also, whether or not policymakers will revert to the original ethanol blending program framework of feedstock also remains to be seen. We remain hopeful. I think there's a good sugar balance in the country. We will be closing September 30th, which is the sugar season, the sugar year, at about 9 million tons of stock, which is quite healthy. And I think certainly gives leeway for the policymakers to consider reverting to the original policy framework.
Muthu, nice to have you back on ET Now. Always look forward to our interactions. I look at EID Parry as a commodity company which is becoming into an FMCG company, because you're moving into branded sugar, branded spices, whatever you can, brand and sell in the commodity space, you're branding it now. When will the migration be captured in terms of the real margin expansion and the real J-curve coming in for the company in terms of margin and in terms of cash flows?
So thanks, Nikunj, for your question. Yes, I think this is a business which we are rapidly scaling up. I think the Parry's brand is strong, and this is the equity that we aspire to leverage. We started off with sweeteners, and we've really extended that into staples. If you look at sweeteners, it is a small portion of the monthly grocery bill, around say maybe 2 or 3%. And I think we were really looking at how do we take a larger share of that monthly grocery bill and use the sort of leverage the brand equity by doing so. If you look at staples as a category, it's very large in India, 9 lakh plus crores. And 40% of that I would say is millets, pulses, as well as rice. And these are the categories we've entered with straight products. Also, the percentage branded in these categories is quite small. It's sub 15%. So there is a huge headroom for converting the branded into sort of the unbranded into branded, which is the expertise that we have built. You will notice that we started reporting the segment independently from this quarter. I think this is we have a decadal view on this business. This will scale rapidly as we start to take more share of the shelf. I think the broader aspiration, if I was to look at a 5-6 year view with the business, is to exit the decade with a substantially larger business than that in the sort of run rates that we have now, at a high single-digit percentage EBITDA. So that's really the objective that we're working towards.
Main business, which is the ethanol and the sugar business, given that there is very little consistency in the way how ethanol pricing would be moving, how do you see that business moving? The whole proposition of the ethanol business was that it was a fixed commitment which was coming from the government. They were getting into long-term contracts with distilleries, the prices were fixed and the raw material supply was assured. But that has changed now.
So, in terms of how we've just finished the capex phase, Nikunj, and I think for some of the reasons you've articulated, I think we certainly had that belief. We are, at least from what we can understand, I think the policymakers are still committed to ethanol blending. Of course, that with a challenging monsoon and being in election year, they had to perhaps reconsider on policy. But I think we have an environment now. Monsoons have fared well. We have a good sugar balance, and also the saliency of grain ethanol is increasing, which is something they've also encouraged. So we remain hopeful that I think the policymakers will have some policy coming our way, which is favorable towards the industry. In a broader sense, I think ethanol blending has a number of benefits, which have sort of been well articulated in the public domain, and I think there is a good future for this segment going forward. That said, I think as we've just finished our capex phase, we'll really be focused on now sweating out our assets, and I think once we have more clarity and there is a more sustainable policy framework which will hopefully come out, we will then consider further expansion into the space.
This is Anish also joining in the conversation. I just got intrigued by the FMCG business that you and Nikunj were discussing earlier. So you did talk about it's a decadal opportunity of sorts. You're looking at high single-digit EBITDA margins there. But let's say over the next 5 to 10 years, what could be the contribution that comes from the FMCG business or the non-sugar business per se? And are you looking at purely organic expansion, or you're looking at perhaps making some inorganic acquisitions as well to kind of scale up your portfolio a bit faster?
Anisha, thanks for your question. Yeah, we do see the FMCG business as a significant contributor. We've gotten off to a good start, and I think we will certainly allocate capital towards this business. It's organic in nature at this point in time, which is really focused around distribution, product development, and people. We will not be shy in the near future of looking at inorganic opportunities as well. As I said, we have a decadal view of the business. And I think a serious intent, to build another franchise under EID Parry, beyond the whole biofuels and the sugar space.
What is the current FMCG portfolio like, and what are the new product additions that you're likely to make?
So Aisha, the current FMCG portfolio is largely comprised of sweeteners. So we started branding white sugar at the entry level, and then took the consumer up the ladder with brown sugars, jaggeries, low glycemic index sugars. We have a low-cal sugar which is on the anvil. We also have jaggery-based spreads which are about to come into the market. We launched into staples with rice, a very hyper-local approach to rice in different varieties of rice. In every day, we noticed that in even a cluster of districts, the varieties of rice change. We also launched into dals as well as millets. These are more the straight entry-level products, and these are focused on building our distribution. We will overlay these in the coming quarters with ready to cook and ready to eat mixes, like upma mixes, dosas, rotis, chilas, so on and so forth. These products are typically more gross margin accretive and will overlay on the straight products.
You do have a very, very large land bank, right, in a lot of regions. What's the plan to monetize that? Are you looking at monetizing that at all, or are you just going to use it in-house to probably cultivate and plant more of these products as you talked about?
So yes, Nisha, there are some large land banks. A lot of these are quite interior. I mean, some of these are even factory operations which have been discontinued, and some are legacy land banks. We continue to explore opportunities. We have explored opportunities in the past, but I think, as you said, with the expansion into the broader food space, these could come in handy. There are a number of other areas that we're looking at, but nothing concrete to report at this point in time.
Muthu, you'll appreciate the curiosity of my question, but today leading newspapers are reporting that seems to be a complete family division which is happening within the Murugappa group of companies. Is there anything you would like to share with us at this point in time?
So Nikunj, my focus really is on the EID Parry business. I think we have a challenging sort of landscape to navigate on the core business side and a rapid scale up to take on the FMCG side. I think the article draws reference to the group at large.
What happens at a group level? You would be independently running EID Parry. I'm just trying to understand that when group level splits happen, ownership and day-to-day business operations, they tend to change. So let's say if I'm asking this question on behalf of your shareholders of EID Parry, and you've got some renowned mutual funds there, individual investors there, HNI investors there, how should they read into this report of Murugappa family split?
So Nikunj, I think as I said, my focus really is to take the mantle forward for EID Parry, and I think that's really what I'm here to discuss. The article, again, as I mentioned, it draws a broader group reference, so I, will not be appropriate for me to comment on that.
Just a follow-up question. I'm not trying to dwell too much into it, but a lot of Murugappa group companies have cross-holdings amongst each other. Eventually, in a course of time, do you see that structure changing, or it will remain like this? Because it has remained like this for many years or many decades, actually.
So Nikunj, I mean, there's not anything I can report on that now. I mean, if at all, some of those are internal private conversations, and I think in all businesses and all groups, there are always those conversations. But I think if there's anything concrete, then you would see formal reports and releases from the group. But there's nothing which I can talk about now.
For EID Parry shareholders, nothing changes. It is business as usual. You are committed to give you 100% to this business, and you are committing to scale up the FMCG business and expand the ethanol and sugar business.
Yes, I think you've summarized it well.
Nice to have you, and certainly hope to see much more of you going forward.
Thank you for having me on the show.
If you like this video, then like, share and subscribe to ET Now.